Great time to check in with Tom Lee, head of research at Fundstrat, chief investment officer of Fundstrat Capital, as well as a CNBC contributor. You weren't really impressed with June that much in terms of the averages kind of stalling out, and you expect July to be better as valuations are more reasonable and sentiment is not crazy bullish. Does that sum things up?
Yeah. I mean, July we're going to get Q2 earnings.
Right.
And in the first quarter, earnings came in way better than expected. And so the market's PE is actually lower now than it was in January by 1 point, one full turn. And I think second quarter earnings are going to surprise to the upside again. So the market's going to get cheaper again. And that means there's room for PE to expand. So I think July is going to be a stronger month for stocks.
8,000 is doable this year.
Yes.
On the S&P.
Yeah. And because 8,000 would be roughly 20 times 2027 earnings of 400. I think that's a low estimate. I think the PE multiple could be 22 or better. So that would be, even 84, 800 kind of would be the upside into year end. But I do think between now and year end, there should be, something that might feel like a bear market too. Not in July, but maybe, between August and October.
Why not in July?
Well, I think for the things Joe cited, that June wasn't a great month, and I think there are a lot of fund managers trailing the benchmark this year. Only 23% of fund managers are beating the large cap growth index. That's the lowest number in almost 5 years. So, I think there's going to be a lot of dip buying this month.
What do you mean? It feels like a bear market. Does it go down 20%?
It might.
And what average? Are we talking about the NASDAQ or the S&P?
I think both. This year, the February to April decline felt like a bear market, and that was only 7%. But I think, in later this year, we have a few things that will test the market. One is the market is going to test the new Fed because he has a new framework and a new way to look at inflation, and we know that there's going to be a gradual unlock of the SpaceX shares, and that's a headwind. And I do think, there is going to be a cumulative shortage of petroleum products, so that's a headwind. And I think margin debt's kind of high. So I think 4 things that could unravel in a way that might feel like a bear market.
Final question. Bitcoin down about 16%, I think, for the month now, past month. We're at, 102 now, 103, something like that? Where do you think we're going? I know you have big ambitions for Bitcoin.
Yes, we do. I will say one thing that has shifted for us in the last few years. Stablecoins are usurping part of the role that we thought Bitcoin would play. So our bullish forecast out there is 1.5 million by 2030. Given what's happening to stablecoins, which are serving emerging markets in a way that we thought Bitcoin would, I think we could take maybe $300,000 off of that bullish case just for stablecoins. So watch that space. Stablecoins are scaling here, I think, much faster than anyone would have expected.
So, Cathie, this is news because this is a different expectation. To the extent that stablecoins become an even larger part of the market, would you take that? Would you take the top number down even further? I mean, if stablecoins do become this, the sort of transaction currency of choice, if you will, how does that change the dynamic of Bitcoin being the sort of digital gold?
So I was holding all other things equal. Digital gold, if you look at what's happened to the gold market, we were saying digital gold could usurp half of that market, or at least become as big, become additive in some way. So that's the other dynamic at work here. And the other thing is institutions, this is a new asset class. Stablecoins are cash, they're dollars. Bitcoin is a global monetary system. It is the lead in a new asset class, and it's a technology all wrapped in one. So while I say $300,000, that would be holding gold constant, let's say. Gold has doubled here since we made that forecast. So again, there are puts and takes. I just wanted to highlight stablecoins because they are happening faster. They're scaling faster. I think emerging markets are huge in this regard, and we're starting to see institutions in the United States focused on new payment rails with stablecoins at the core. So very interesting movement. I think the whole space gets bigger. This is, a global monetary system really going digital without government oversight, very private. So it's a very big idea.
Yeah, that doesn't change your view of the digital gold aspect of Bitcoin at all, and that's not even related to it. So maybe you had 1.2 million based on digital gold and another 300 from the transactional. So I think I understand what you're saying.
And institutions really have just dipped their toes into this space. Right. We have just started, so we have a long way to go.
You don't have to insure. There's a lot of things that are better than gold about Bitcoin, and most of the most important things are the same. So it's either better or the same. So it could at least be half. It could at least be half of gold.
Absolutely. Okay.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.